You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Hey guys, welcome to the Reinvest Studio as we commemorate episode 150 on the podcast today.
Crazy.
Josh, you should be really just grateful to be here today.
Seth and Garrett, it is a pleasure and an honor to be your guest on the Reinvest podcast today. And guest number 150. That's pretty cool.
What a good number.
Tell them who 100 was.
Yeah, 100. So when we were at episode 50, I had set a goal, and I was like, man, what would be like a big guest to get on for episode 100? What can I look forward to this year and go after? And so for episode 100, we got on Brandon Turner. So then after we did that, I thought, what would be even a bigger guest that we could get for episode 150? And here we are today.
Really know how to stroke the ego. No, we are excited to have you, Josh. Just a little context for our listeners. We met at a one-day business seminar at Cedarville University for Christian entrepreneurship, leadership development. Got to sit down. And I remember the guy that we were sitting with at the table, who was a buddy of yours, kept alluding like, yeah, Josh knows a thing or two about real estate. And I just kept being like, I feel like there's more that we're missing. So this episode is the unfolding of your real estate entrepreneurial journey. Give us a little synopsis. Where are you today, kind of from an investment entrepreneurship perspective, and then we'll kind of back into where you started.
Yeah, I think right now you could best describe where I'm at on the real estate side as I'm primarily in commercial. My favorite space is medical commercial, or as I'm more aiming towards now is office. And you snicker and you laugh and you say, why office? Everybody's running from office. That is precisely why I'm running to office.
Like medical office specifically, or just any office?
My preference would be medical office, but I'll take office regardless.
Wow, that's a spicy take. We'll have to get into that a little bit later. So you've got some real estate holdings. You're doing some ground up development on some strip centers. What are the kind of things that you're doing? Are you just going after existing assets, or?
It's a mix. I would say I've kind of been all over the place over the last 2+ decades in real estate. So I started out just residential rentals, Section 8 rentals. I have some wild stories getting started there, but then I grew in just single family homes, and it got kind of chaotic when you're over here in town, you're here in town, and you're trying to manage these roofs all over the place. And so I got it in my head that multifamily would be the way to go. And so I kind of shifted into multifamily towards the maybe 2015, 14, somewhere in that era. I was kind of shifting towards multifamily, and that served me well for a while. And I towards maybe when COVID was starting, I realized multifamily was getting like wildly hot, and I was losing interest in it. And I was starting to shift into the medical commercial side.
Why were you losing interest in it? Just because it was harder to buy new deals, or you're just kind of like your attention deficit disorder was kicking in?
Maybe a little bit of both. Realistically, I think real estate is ever evolving, and I am a value add kind of person. I want to take that piece of junk. I want to take that reject property, whether it was in my early days, the foundation was caving in. I'll push that foundation out and I'll fix it when nobody else could put a offer in because they couldn't get bank financing. I'll take that and value add. And so that theme followed me. And when everybody is into something, during the housing crisis of 2008, 2009, everybody's running from single family homes. Banks didn't want a loan. That's when I picked up some of the best range of my single families, because if there was a foundation issue, that was my favorite. Caving in, you can like put your hand outside because the walls are falling in on the inside. Say less, because I'm not scared of that. I'll dig it up, I'll push it out, and we'll fix it. And then you got a great home. But it really lessened the pool of people that were bidding against me. It gave me a competitive advantage. And I think no matter where you're at in real estate, you need to look at like, where do you have a competitive advantage? Why compete on the same plane as everybody else?
Yeah, well,
real estate is so broad.
You can't, because there's always going to be somebody that's more well capitalized. They know the market better. They have more resources and inroads and relationships. So absolutely. I remember early on, I kind of like was looking down like, oh man, I'm stuck in Lima, Ohio, no. But then you really, I think through bigger pockets, you realize the best advantage you have is in your backyard.
Yeah.
So that's like ground zero. So if
Well,
you're listening to this and you need encouraged,
and
be
I think
encouraged with
too, one thing we realized once we really started to look at other markets is that it's actually kind of hard to get cash flow in a lot of other markets. And here we are in Ohio, in a Midwest area, and we didn't realize that cash flow is kind of sacred here. And it's a little bit different than maybe if you're on the East or West Coast, or if you're in the Sun Belt now where things have blown up, and it's just a little bit different. And so to a certain extent, that is a competitive advantage that we have in the Midwest, is that we have a little bit more stable assets with some cash flow. But you picked a good time to sell. So, I mean, you coming up into 20 when COVID kicked off, you saw things were exploding in the multifamily space, and you started to sell out of all your multifamily and single family. Okay.
So
Yeah, I sold by the end of 2020, I was completely out of multifamily and almost out of single family.
how many units did you sell over that time frame?
2 or 3.
Yeah, a couple, a few. I'd have to go back and look and tally that up. But
Yeah.
it was a complete shift for me because I was also very, very involved with the multifamily, whereas commercial, I'm a triple net guy.
Oh, okay.
Once we set this up, it's coasting.
You bought your time back.
Yes,
Interesting.
I did. Yes, I did.
So here's a question for you. This is somebody would be like, oh, cool, he rolled his money over. What mechanisms did you use, or where did you hold your money while you were recalibrating on what you wanted to go into, which is now office?
That is a great question. I really contemplated the 1031 exchange during that time period because we're talking about massive hits on taxes.
Yeah.
And
into 6 figures. Yeah.
Yeah. I talked to a few people that I trusted that had kind of been there before. And that's a theme throughout my life, is people that have really gave me answers and I've been able to go to, and I truly appreciate those people. Every one of them advised me against doing a 1031 exchange. Each one of them had done it and said, I regretted the property I bought. I regretted the deal I did. I felt rushed. I bought way too high, or I bought a property that was just a thorn in my side. I'm like, this is a recurring theme. And so thought about it, and I was like, I'm just going to take the hit. I'm going to pay the taxes. And I did. And I sat on it for longer than what I could have done a 1031 exchange. But I found deals that I couldn't have if I was impatient. I found off-market deals that were phenomenal. I can give you an example if you'd like of a property. So the first commercial property that I had picked up after that sale, I was looking outside of Columbus because Columbus kind of blew up and got so hot that the profit margins, the return, the value add, it wasn't making sense anymore. We're getting outside money that's investing more, in my opinion, than what it's worth. You're getting into too slim of a margin. So I started looking outside to like Cleveland, Dayton, and I started investing in those areas. There was a Cleveland suburb that had a 10 unit, 25,000 square foot, single floor medical office plaza. This building was only under 20 years old, and it had sat vacant all but maybe 20% for over half a decade.
Oh my word.
And I was looking at purchasing the little part that was a separate ownership that was it had been in a very good triple net lease for the whole life of the building. So I was going into it looking at these numbers, and like the numbers make sense. The lease is a little bit high. If this tenant ever left, I probably could never reproduce that. But the realtor was like, well, to sweeten this deal, there's 8 more units that are held by some company out of state that has had them for half a decade. They were originally going to split these off into condos. It just never worked for them. They're in Chicago. It's a different model. They thought it would work. And it's just been sitting empty. The roof is leaking. It's fallen into disrepair, but it's only 18 years old.
Yeah, interesting.
And by the way, you can have it for 1/6 of what it last sold for.
Oh my
word.
And I'm doing the math and I'm like, okay, I know this is kind of like office and I know this is high risk and everybody's saying stay away from this, but the value add side of me is like, ding, ding. The numbers work. I mean, the numbers just work. So I bought into that.
What was your break even point that you needed to reach on like an occupancy perspective? It was that 20% occupancy.
That's hard because of build out costs. So it depends on if you're counting all in build out costs, because it's a variable depending on each tenant that you brought in.
Sure.
But I think at about 40%, it probably would have broke even,
gosh.
depending on what 40%. Yeah. So it was a 2.5 year project, a little over 2 years. Really 2 years, but if you're counting the like lease up, free rent, everything, until it was like fully 100% cash running, it was 2.5 years. About a $3 million gain in equity.
Oh my word.
Almost no basis. Like I have so little expense in the building. So there's that gain, but then there's mad cash flow because I don't have that much in it. So if I keep it, it's amazing. But the backside is if I sell it, it's amazing.
Well, so if you're listening to this, one of the things I want to highlight with what you're doing is that's a coupon clipper for the next investor. And so anytime you have triple net scenario and you are making stable, consistent cash flow that requires little to no management, then you can charge a premium if you were to ever exit that. And that's a little bit different than some of the Section 8 stuff maybe that you had done to contrast that.
Yeah, for sure.
Polar opposite. Now, I hope I never sell the building. I've gotten to the opinion that real estate should just be kept. Unless it's a problem child, unless you have issues, just keep it. I am not interested in flipping. I am not interested in turning buildings. That's a job. That's a business. I have businesses, but they're not real estate. My real estate is long-term investment, and those gains build over time. It's a long game. This building that I built out in Cleveland, it's a mix of tenants. You know, Seth and Garrett, I was telling you earlier about a tenant that went belly up. It's a community outreach, takes care of homeless people that don't have medical care, people that are underprivileged that are going into ER and they maybe need help with their teeth and they're going to ER, or maybe they just need a warm place to sleep and they're going to ER. This company was a startup and they created a business basically taking people out of that scenario and taking care of their needs, just meeting them wherever they're at, taking care of their needs. And this company went out of business 3 years in. So this was the beginning of this year.
Is this at this same property you're talking about? Okay.
This is that unit. So that was the first tenant I put in. And I believed in them because they were doing something great. And by then by the time I got this bad news that we were already at 100% occupancy in the building, I could replace them. That's not an issue, because now that we have anchor tenants and it's solid on almost everybody's on a 10-year triple net, it wouldn't be an issue. They're a small portion of the building, but I really liked them. And after some back and forth, they got back with me and told me that they're going to stay based on their relationship with me. They're going to keep 2 locations, one in Tennessee and one here. And I'm that one because of the relationship. And that is what commercial is about. And that is the make or break. When people are afraid of office, here's the thing. If half of the office tomorrow leaves all across the country, guess what? Half of them still need a place to stay. If you can buy value add where the price is right, you're giving them a fair price. But more importantly, you establish a relationship where you are their advocate. You are their partner in their success. Every email I send out, I want to partner in your success. What can I do to make your job easier? How can I help you succeed? These conversations I have with them, it's not just the owner or the rep. It's the manager on site. It's when they need something. Yeah, it's triple net, but I'm their advocate. I want them to succeed. If they succeed, I succeed.
Right.
They want to stay. Now, when they're expanding, they're contacting me. Hey, we're expanding into this market. Do you have anything there?
Can you do
Could you buy something?
Build a suit for us?
Yes. I've been asked, can you build something there for us? Even though they don't normally do new construction. So
that's an incredible phone call to get. You know what I'm saying? Like but that is what I love about it, is it flies in the face of it's just business, because I think we get this narrative in our mind that relationship is dead and that you really just kind of have to play the game and win. It's got to be the transactional focus.
It's easy to get cynical and transactional with residential and commercial. I mean, both of them really. I mean, it's really easy to kind of just get this cold approach to it, but kind of shows the difference in you taking care of the tenants that you have in your building and it's the relationship that you built with them. So that was your first office building project, correct? Is that what you had said?
First large value add in that space. I'd already had some.
I want to just circle back real quick about the 1031 exchange comment. The broker inside of me is always going to tell you that the 1031 exchange is the right thing to do. But
to be fair, we've seen what you said.
Yeah.
We've seen that happen.
Yeah.
Where people make hasty decisions.
It is.
We sold a big building in Lima. It was because that one on Elida Road.
Yeah.
The guy had a 1031 that he needed to use up, and it was this like old hodgepodge warehouse
manufacturing building that was an EPA nightmare.
Oh yeah, and he bought it because he had a 1031, and there was a current lease on it. But what do you do when that lease is gone?
Yeah,
or if that business had gone out of
so much of the value was wrapped up in the lease. Yeah,
so much of the value is wrapped up in the lease.
But I think what was wise about the advice that you got is, let's say that you're looking at maybe a 25%, taxable gain, something that's of pretty significant value. Well, between overpaying for the wrong asset, that tax savings or deferment can get eroded really quickly. And you were patient, and then you went into a distressed asset class that didn't have a lot of the competition. So here's what I want to ask you, though, because Warren Buffett always has his, famous kind of adage on this whole thing, but everybody thinks in the moment they're going to have the discipline to actually listen to that advice. How hard was it for you to kind of switch that counterintuitive thing off in your brain and say, I'm going to take the plunge? Because I'm sure it didn't feel clear even with the discount that you were looking at buying it with.
Yeah, it wasn't as hard as it sounds, because I think I'm more of a conservative investor to begin with. In 08, 09, I watched as everybody was folding that were so much more successful than I was, that had built portfolios so fast and so many more than I did. And I was watching them go under, and they were more qualified. They were smarter than I was. They had better funding, but they were like, go, 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 growth at any cost, growth, until they got their legs cut out from underneath them.
Wow.
And so I already have weathered some of these different seasons and seen that the patient people in this, the long game people, they're building wealth over time.
Mm-hmm.
Yeah.
People that are really impatient, that want that quick gain, sometimes it's at the expense of everything. And
there's a guy that I was listening to his podcast, and he said the biggest superpower you can have is consistency. If you can wake up and be consistent every day, you will win.
Mm-hmm.
It's not a matter. Yeah, it's not a matter of if you'll win or if you'll find success. It's if you can keep doing the right things and you just do them every day, you're consistent, you will win. And so it's just like with your story, it's not about the guys that were able to move and grow super fast. And we've even seen this in the multifamily space. I mean, just think about over this last 5 years when you were selling out of your multifamily, how many guys jumped into multifamily and then got their lunch eaten in 2023, 2024, and now this year in 2025, as the interest rates have shot up and people are folding and people are now in distressed situations with their debt. And so there's a lot of wisdom in that consistent, long, steady build of stacking those successes and stacking those victories over and over and over again.
For sure, consistency wins in real estate. And I would venture to say that relationships and people first win. And I know that is counter to most business ideology. It should be dollars first. I firmly believe it's people first. Every time. Pass on a deal that will hurt somebody else, it will come back around. That last apartment complex that I sold in 2020, early 2020, a young couple had come to me, and it was off market. I hadn't listed it, and they wanted to buy it, and it felt like a very high price, but it cash flowed and it was going to work. And they did 3 months of their due diligence, and they were pulling funding from everywhere to do it. And they were freaking out by the last week. They're super confident at first, and then it was just like they were freaking out. They had a few rentals prior to this, and they were borrowing a lot of money from a lot of directions to buy this. I got to the point where I realized they weren't ready for this. And I asked them, do you want out of your contract? I'll give you your earnest money back. We'll part as friends. And they said yes. So we unwound the deal after
start
they had
crying.
disturbed
They're
my
like, thank you
tenant.
so much.
Well, and I
What
had
a
already
relief, yeah.
irritated all my tenants from all the inspections and all the cycle put them through.
Yeah.
And I had a personal relationship with a lot of these tenants. I knew these people. And so I thought I was taking a huge hit and I was never going to get an offer like this again. But the right thing to do was to walk from it. So I posted the apartments, posted one building because they're all like condoized, they're separate ownership. And I said, right of first refusal on the rest, posted it on a Facebook group in Central Ohio. I got over 200 offers in 24 hours, many of them way more than asking price.
Wow.
The offer that the couple was going to give me that I was going to take, that I let them out of, was, I'm going to say it was about 70, low 70% of what the high offers were coming in. We're talking about a lot of money difference. So I got to, in 24 hours, respond to more emails than I've ever responded to. And that's all I did, responding to offers.
Yeah.
I took the 5 best offers, looked through them and said, who do I want to do business with? Because I'm very relational. Who do I think will be a good fit? Who will take care of my tenants? A lot of these tenants I've had for 10 years and I care about them. I know their story. I want them to be taken care of. I don't want them to be taken advantage of. So I went to who I thought I wanted to do business with. It was a couple brothers from Syria, great people. And I said, hey, I don't think your offer, because they were one of the 5 that were well above my listing price. And mind you, my listing price was already more than what the previous couple was going to give me.
Right.
And I said, I think your offer's too high. And here's why. It won't cash flow unless you raise rents to this point. And this guy has cancer. He's going to live there till he dies. This person is a single mom and she can't afford too much more. So here's the deal. If you can cap these particular units, take care of them, and I can drop the price by, I think I dropped it somewhere in the 35 or 38,000 a door from their offer. And they're like, what's the catch? What are you trying to pull on us? And nothing. This is legit. We can do this. Great guys. We go to the closing, goes through. We went to lunch after closing. The brothers, the real estate agent, everybody went to lunch. And they're like, right up until the last minute, we thought there was some gimmick or some catch that you were just trying to pull over us. No, I'm just doing the right thing, right? Anything more than that would have been disadvantage for them. They would have either lost money, lost the property, or had to abuse the tenants. Fast forward, got to be great friends with this guy, the main brother that I was working with. He's in a real estate group that I meet with regularly. Fast forward a little further, my son is getting into real estate. He's almost 18. He's been saving up all through high school to buy his first rental property. But you know what it's like 3 years ago, especially in Central Ohio in a good area, you can't find anything that's a value add. And I'm a value add. I want to take a project that is like full gut inside and out in a good school district so I can spend the summer with my son inside and out renovating this unit. So moving forward, he knows exactly what to do to run these projects. Couldn't find it. Well, this gentleman that I had sold the apartment complex to was talking to another gentleman that was in the real estate group that we'd formed. And he's like, I've got this property that I could sell. It's in your buy box, but both of them realized this is also in Josh Vidor's son's buy box. I wonder if he'd like this duplex here in Dublin School District.
Oh, wow. Wow.
And so they passed on the deal. Mind you, the gentleman that I sold the apartments to, he would have made an immediate $50,000 equity on this deal just because it was priced at that. Not to mention there was a huge value add once it was renovated. But he passed on it to do the right thing to set my son up for success. I had a great summer working with my son.
That's incredible. Oh my god.
But the story's not over there.
Oh.
In addition, because I let that first couple out of buying that apartment complex and I didn't sell to them, and I did sell when I did to the gentleman from Syria, when I sold off some of the tools and inventory that I had had for that apartment complex, I was selling a flooring sander. The gentleman that came to pick up the flooring sander came to my house. We're talking. We hit it off. Became a good friend also in this real estate group. We are now business partners. So
What?
the Hocking Hills Treehouse Resort, the Hocking Hills Family Fun Center, the world's largest inflatable bounce park. That's my business partner. That's how we met.
What?
So many good things come from just put people before profit. Do the right thing. You may make a little less money on the front end, but time and time again, people will come back to you and want to do business with you.
Wow, dude,
that's a good example. And it's interesting.
It's crazy.
You telling that story about the apartment complex. That couple got nervous and didn't want to move forward. It was probably risky for them. They're borrowing a lot of money, but they were probably like, "Oh my gosh, we should have bought that property."
Yes,
we could have hopped on Facebook.
It's kind of the other half of real estate where it's like sometimes you just got to push through.
Yeah,
and it does feel risky when there's those unknowns. But that's the importance of it's another thing Warren Buffett says. It's not risk if you know what you're doing. And so it's like really educate yourself. And if you're wanting to get involved in real estate, there's always going to be some unknowns, but you can actually equip yourself. And there's so many resources out there now where you can like learn how to do this. And so, but really cool. Yeah. Do the right thing, even when no one's watching, even when it's not publicized.
Yeah.
Because you're right. There's the biblical principle of you will reap what you sow. And it's like that. And you hear people say different versions of that, karma or whatever, however people want to say their version of it. But it's a principle that has just held true where you do reap what you sow. And so make sure you're reaping the good things, and sowing the good things. And, it's awesome.
The title for this podcast episode was Stacking Success and Playing the Long Game. And I didn't even tell you that on the front end, but literally you've just unfolded, all the reasons why to do that, because it's easy to look to the left, to look to the right, to see the guy that's scaling so much faster than you and be like, what am I doing wrong? I think I'm making life harder on myself. And am I going to get there? It feels like the carrot's always out in front of you. But you're just building that strong foundation. You're doing the right thing, that relational currency. And honestly, there's no shortcuts. I think there's ways you can accelerate it, but you'll never find the shortcut. It's good.
No,
Thanks,
and if
Josh.
you put profit before people, another concept that you'll be familiar with, what does it profit a man to gain the whole world if he loses his soul?
Yeah.
Mm-hmm.
At what point is it worth losing your integrity, your reputation, your really purpose and gift here on earth of how you can impact other people? What's it worth? Can you put a small dollar amount? Can you put some zeros behind it? Is that where it's worth?
Well, and you can. And unfortunately, Seth and I will, we see a lot, right? Just as you do. You deal in an industry that's driven by money and assets and investing. And, this is a really prevalent, focal point. And there's times where we will observe somebody compromise their integrity.
Yeah.
And usually there is a dollar amount associated with it. And so I've gotten to the point where I'm like, okay, privately, I'm not saying this to this person, but I'm like, your integrity was worth $15,000. Your integrity was worth $500.
Ouch. Yeah.
And the point is, there is a dollar amount I just don't want to put a dollar amount in my integrity. And I don't think we should. So
yeah, we definitely shouldn't. I'm going to clear that up for everybody. You should not put a dollar amount on your integrity.
No, I'm just kidding.
Yeah. Well, and obviously everybody's made some mistakes and no one's perfect.
Yeah.
And as my now 20-year-old son told me the other day, and this is actually really inspiring, you should be a little embarrassed of who you were yesterday. Because if not, you're not improving. You're not growing. If you're not a little embarrassed of who you were yesterday, then you probably haven't grown since yesterday.
Wow, that's really
so
good.
Everybody,
how old is he?
He's 20 years old, and
20.
I can't tell you how many times he has given me great advice.
Wow,
that's awesome.
Must come from his mother.
For sure.
All right, we're gonna move into our smaller pocket segment. So, Josh, go ahead and tell us about a real estate deal, or business transaction that has gone wrong, and kind of what did you learn from it?
So going back to the very first rental property I ever bought, I bought in a rather rough neighborhood, but I didn't know Columbus at the time. And the deal was there. There was a value add, right? I put my first tenant in. It was Section 8. And I think it was a 19-year-old girl who was pregnant with her fourth.
Okay. All right.
So she needed a fourth bedroom. I believe that's what it was. So I had built out space, value add, had 2 huge living rooms in this old 100-year-old house. I built a living room into that, and magically it became a fourth bedroom. And for Section 8, it became more valuable.
Yeah, good strategy for Section 8. For those of you that don't know, they pay based on the room sizes and of the units and stuff like that.
Yeah, room count is everything with Section 8. If you have a 5,000 square foot one bedroom, it's going to get pretty similar rent as a 1,000 square foot one bedroom. So I put this tenant in there, and I had gone maybe 3 months after doing a full renovation in there. And mind you, this is my first property. I did all the work in there, and I get this letter in the mail saying there's alleged drug activity going on at my rental property. Mind you, I was like 23 years old at the time. And I kind of came from a naive background in a small town, and drugs aren't really my thing. I just never got into that. So I'm like, I look at this letter, I'm like, oh, this is interesting. So I go knock on the door, and my tenant answers, and I'm like, hey, I've got this letter here, and it says there's alleged drug activity going on at this property. She looks at this a little bit. She's like, huh, that's strange. I have no idea why they would say that. Probably got the wrong address.
Not here.
Yeah, she's like, there's a lot of that going around here. They probably just got the wrong address. They don't know maybe exactly where it is. And so they're probably just giving you like a roundabout area. It's a good answer. Okay.
Sensible young woman.
Yeah, I ignored it and went on, did my thing. And fast forward a handful of months later, I was out of town. It was my birthday. I was visiting my fiance and her family out of town. And I come back that late that evening, and it's like probably 11 p.m. when I get back. And I notice there's a paper stuck to my door. And I look at the paper, and it says, you have a unsecured property, and you have 24 hours to completely secure it, or we will call it a public nuisance and we'll bulldoze it at your expense. I'm like, what? And I'm like,
what a letter to get.
But I'm looking at the time, and it was 8 a.m. that morning.
Oh,
I left at like 7:30. So I'm like, oh no, the clock's ticking. All I have is overnight. And so I zoom over to my rental property, and I see bullet holes through all these walls. Doors are kicked in, windows are busted out. And I mean, my mind's racing, like, what on earth happened? I get in there, and I can look through the walls, and I can see where a bullet went through this wall, that roof, and went through the next building. And I had a little outbuilding that I was building out as like a one-room efficiency.
Oh my
I had like
gosh.
3 bullet like slugs in the refrigerator that had like stopped their final destination after going through all these walls and everything. Just like they're in the refrigerator. So I'm like picking these up, like, what happened here? There's a crib, and under the crib is a spent magazine for an AK-47.
No
in the register,
way.
there's like ammo. It's hidden all throughout here. And I'm just like, what happened? So SWAT had come, kicked the doors down, ripped the walls and ceilings out. And this is an old plaster house, mind you. Just annihilated this place. They found drugs. Surprise.
Yeah.
And they also like found a safe in the second floor. And if you saw this safe, it looked like shredded, like it looked like a tuna can that somebody went through a metal shredder. And then they threw it out the window. I found out later that the team that goes in there, they take pride in how fast they can hack into a safe. But they found drugs, and they tore the place up. So I pulled plywood out of my garage I was living in, because I'd put plywood on the inside of the walls. I tore it out because the stores were closed. Tore plywood out of the inside of my garage, got it over there during the night, boarded up the windows and doors so they didn't confiscate my property, rebuilt it.
Did you have insurance on that property?
I did, but I had already learned the hard way. I was never making an insurance claim again. The property I was living in, I was renovating, the one that had the sticker on the door, also in the hood. Bought them at the same time. I had gotten robbed multiple times. And one of the times I was in the house, and they had ripped open the garage door that I had Tapcon down because they had previously broke into it, and stole all my tools. And back then I was a contractor. I was building and remodeling. And so I made an insurance claim, and they reduced that insurance claim of, there's like $30,000 worth of loss. They reduced it down to like $3,000. Like, this is depreciated. Wow. You don't have receipts for this. And if you make another claim, we're kicking you off. And I realized back then I'm going to be minimal with insurance and try to like more self-insure. High deductibles, just don't make a claim. My insurance is still very cheap compared to other people, because in 20 years, I've never made another claim.
Wow.
So no, I didn't make a claim. Rebuilt it, sold it. There's a sort of happy ending. I sold it for about twice what I bought it for. Not sure if it was worth the stress, but
Yeah.
but in real estate, that's the thing.
Yeah.
If you do a value add, even in a worst of scenarios, typically you're still going to come out all right.
Yeah.
Yeah. And time heals all wounds that way as well. It's in your favor. And that is crazy. AK-47 rounds in the refrigerator and a spent magazine under the crib.
Well,
Yeah.
to top
That's
it off,
irresponsible parenting.
to top it off, they had to search the house, so they tore into it. So that's pretty
Man,
good.
Yeah.
That is wild. Yeah, that's a pretty good smaller pocket story. Normally I try to one up you, but I really can't do that. So
He had a tenant not pay rent one time.
yeah. Oh. All right. Well, we're gonna pivot and we're gonna go into what's called our little nugget. So, Josh, you've given us a lot of really great stuff. And I think one of the reasons why is you've had a lot of experience over the years and you learn by doing. That's just how it happens. So thank you for that. But give us a principle that you haven't given us already, something that's kind of maybe centered to like your code on how you conduct yourself and operate your business that our listeners can apply to how they run theirs.
Well, we already touched on this, so I'm going to give you two, but I would be remiss if I didn't reiterate. Genuinely care about people. Take an interest in the other party. Take an interest in your tenants' lives. Take an interest in the person you're doing a dealing with. They're more than dollars and cents. Care about people. If you genuinely care about people, people will seek you out to do business. Cannot tell you how many times I've had people come find me to do business with me because they've heard how I do business. So
what a compliment.
You can eke out a few more dollars by stepping on everybody to get to the top. But at some point in time, is it worth it? Probably not. And a lot of times over time, you get that reputation. People don't want to do business with you if you're doing it like that. So if you're playing a long game, and you should be in real estate, put people first. It will pay off. The other thing I'm going to say is include your kids in your business dealings. So this is your actual nugget. That was just a reiteration.
Yeah.
From a pretty young age, I included my family on my dealings. I'm talking like young teen age. I would talk about the deals. I would discuss them with my family. I'm not weird about dollars. So I'm doing this deal. Here's the upside. Here's the value add. What do you think? I cannot tell you how many times, especially in more recent years, as my son is getting older, he is seeing things that I don't see. Talk about like being able to see that like come back around. Include your family, include your kids, and be careful who you marry if you haven't gotten married yet. Because if they're spending it faster than you're earning it, or if they're not on the same page, it's going to be a hard road. So don't think that you can separate your personal and your business life. They are so commingled that they are one.
Yeah.
And if you look at them as one, it'll work pretty well for you. If you try to keep them separated, it's going to, if nothing else, it's going to be a harder path.
I think our culture has really kind of just how it is now is that, the mom or dad, you go to work and you do whatever you do at work. No one knows. And then you come home and you're kind of this different person and living this different life with your kids, and your kids maybe know you work in an office. They just don't know what you do. They don't know what that means. And I was reading a book, and it was just encouraging what you were talking about. And I think it was Take Back Your Family.
Josh.
Jefferson
Bethke.
Yeah, Jefferson Bethke. And he was just like, man, invite your family into your work. Invite your family into your job. And kind of what you were saying, how can you get them excited about what you're doing and give them a peek into your life and all the good stuff that really happens when you do that. And one of the reasons I really like entrepreneurship is it's so much more applicable to do that if you are kind of running your own business or if you're in real estate or whatever it is, because there's just so much more going on. When I was working in the restaurant industry, it's like, I brought out food today. It's a little harder to get people excited about that, but that's kind of one of the reasons too. It's been a little bit easier for me to do that with my family as well.
I think if you're in real estate, you're always doing deals. Even if you're a realtor and you're just listing houses, you could still include your kids with that. I think everyone should be involved in real estate. So, assuming that you have some business acumen and some entrepreneurial spirit, everyone should be buying real estate. And if you're teaching your kids at a young age what a good deal looks like, what the upside and the downside, the real side of it, right? Like there's the ugly, there's the dirty, there's the rough. But if you're teaching your kids from a young age, then they're not going to be afraid of them. They're going to know what they're looking for. And you might just get a business partner out of it, right? You never know. I'm hoping to partner with my son at some point.
Yeah, well, it sounds like you did this summer, rolling your sleeves up on a
For sure.
duplex in Dublin.
For sure.
Is he looking to sell that? I'm just kidding.
No, he closed a week after he graduated. His goal was to close before he graduated, but it dragged out a little bit longer. And he's going to hopefully keep it for life, because why sell?
I know. Yeah. I know. That's so cool. And, I think, as a parent, you got to view life as discipleship. And when you have that approach, nothing's off limits. And like our parenting policy, which some may critique, is we probably share too much versus too little. And some people are maybe put off by that. And I guess the jury's out on if that's wise or not. But I just don't want my kid to get to the point where they felt ill-equipped. And I think there's a way to do that in the context of faith and scripture that is anchoring, instead of like, oh, you're ruining your kid's innocence. I'm like, well, not really. Like, it's going to happen. Like, it's
going to anyways,
waiting for your kid. And I'd rather do it while they're in this little incubator right now where it's very safe to fail and to get those reps in under the protection and the covering of mom and dad, versus blindside them when the stakes are a lot higher. Yeah. Now, I'm not saying we've got it figured out, but if that's like the driving principle, I think it will lead you to bring them in on life in all the varieties of what that is, from business to sexuality to relationships to college and future and purpose and all of it. So, man, okay, as we kind of land the plane, we have two questions at the end that I think are really important. One of them is, what's been the best resource in your business development?
Mentors and people older than I am that have done it before me. So I date back before any of the fancy podcasts or groups that are sharing this information. People getting started now do have a lot more resources available to them. You could do Bigger Pockets. You could do Reinvest. My goodness, if I had access to Reinvest, my life, just imagine where I'd be at.
We did not pay him to say that.
No, it's true. But seek out those people that are one step ahead of you. And then I'm going to take it one step further. Be that person that's one step ahead and is mentoring people. I'm passionate about mentoring young men and really guiding them to success, both in their personal, professional, and spiritual walks. Those all go hand in hand. They all work together. And if you're not giving back and mentoring a generation beneath you, you're kind of being selfish, because so many people have fed into you by the time you're successful. And don't wait till you're uber successful. I waited too long before it. Now Fridays are my day. I stack coffee appointments back to back, and I'm just pouring into young men's lives, because why not? We now have the ability to change the trajectory of all these young lives. So find a mentor and then become that mentor.
That's good. That is good advice. Last thing is, where can people find out more about you and follow your success?
Great question. You could go to esotericcompanies.com, my website. You could find me on Facebook, just on my personal name. I'm not real active on social media. I'm not on Instagram, a little bit on LinkedIn more recently. So you could find me on LinkedIn. That's about probably the best way.
Cool. We'll put those links in the show notes.
Thanks.
Josh, this has been a great episode. I always love getting into the stories behind entrepreneurship, real estate investing. And I always appreciate too, sometimes we'll have guests on, they'll be unnamed. We'll say, hey, like, what's a struggle that you had? Or, like kind of that moment for vulnerability. And it's just all kind of very like whitewashed, and sometimes it's hard to get the real look at it, because you want to go into this eyes wide open. So,
it's kind of hard to get to the heart of the issue.
It is hard.
You know what I mean?
Yeah. But no, you did that.
But no, we really appreciate you coming on today, Josh, and sharing with our audience.
It's been my pleasure. Thanks, guys.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, Go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.